So yesterday we ended at question 2 of the 2013 Fundamentals of Accounting Supplementary Question Paper, and where we looked at control accounts. So we're dealing with control accounts, and my connection just failed, like totally. I lost connection, and so we're dealing with the creditors control account, where we're actually failing to add up the amounts. Yeah? So I tried going through, but it's still not giving me the amount that we got. Now looking at all the transactions that we recorded, they are the only transactions we recorded, all transactions that were given, but still we could not get the balance carried down that was given. Um, so so in the closing balance that we got is 14,000. Was supposed to be 14,530, but we ended up getting 14,440. So there's actually a what a difference of $90. There's a difference of $90, which I still fail to get to where it came from. But I'll still go through the questions and then get back to you once I get the reason why it was not balancing, because it has to balance. So for now we'll move on to the next. For now we'll move on to the next question, which is question 3. So we are starting off with question 3. Where's the mouse? Okay. So question 3 is part of the bank reconciliation, but in this case it is suppliers reconciliation. So in the previous sessions that we had, we only looked at bank reconciliation, but we never looked at suppliers reconciliation, or suppliers the reconciliation, where we are given a supplier statement as well as a creditor's ledger account. So it says that a bank statement and a cash book are not the only accounts that need to be reconciled in the business. We also have other reconciliations, such as the supplier statement and the creditor's ledger. So your creditors, remember that you keep you keep you keep all recordings of transactions that you make with your creditors. So your creditors also keep recordings there. For example, you buy items. Your supplier is maybe Gain. Okay? So every time you buy your inventory or you buy your goods at Gain. Okay. Now when you buy your goods at Gain, whenever you buy goods on credit, whatever transaction you do with them, you record them. Okay? So what happens is that each and every month, each and every month end, just like the bank reconciliation, each and every month end, your suppliers send a statement of your account that shows you the balances that you have that you need to pay or so. So when you get that statement, you will need to compare it with your creditor's ledger account that you have. Ne? You will need to compare it with your creditor's ledger, or in other words, of your creditor's ledgers of that certain supplier. Now remember, you have a lot of suppliers, right? So that's, let me say Game is one of your suppliers. So Game will send you your statement, and then you will have to compare and then come up with a reconciliation statement of Game to reconcile if your creditors ledger if your creditors ledger of Game is not balancing with the statement that they sent to you. So what happens when you have more than five or more than two or more than one um, suppliers? So all those suppliers send statements, and therefore you will need to reconcile all those suppliers statements one by one with their ledger account. Okay, so we are given the information we are given a supplier statement. We are also given a creditor's ledger account, and apart from that, we are also given additional information. So we need to take note that these creditors and supplier statement are dealt with exactly the same way we deal with bank reconciliation. So we have to tackle this question the same way we do bank reconciliation. So there's basically no, the only difference is that now this is the supplier statement and the other one is a bank statement. Otherwise, the way we do the bank statement is the same way. So we draw up a creditors, an updated creditors ledger. When it comes to bank reconciliation, remember we draw up an updated cash book. Now with the suppliers reconciliation, we draw up an updated creditors ledger, and then we draw up a suppliers reconciliation statement. When it comes to bank statement, we draw up a bank reconciliation statement, but in this case, we draw up a suppliers reconciliation statement. Okay, again, just like your bank statement or bank reconciliation, the debit side of your supplier statement, the debit side of your supplier statement is the same as the credit side of your creditor's ledger. So the debit side of your supplier statement is the same as the credit side of your creditor's ledger. And then the credit side of your supplier statement, the credit side of your supplier statement is the same as the debit side of your creditor's ledger account. So the credit side of your supplier statement is the same as the debit side of your creditor's ledger account. I believe that is clear. So we'll need to compare the sides. The first thing, you will need to compare the sides. Now you will look at the debit side of your supplier statement, and you look at the credit side of your ledger account, and then you compare the amounts. Then you identify which amounts are not appearing in the supplier statement or which ones are not appearing in the creditor's ledger. Then you also compare amounts on the credit side of your supplier statement with your debit side of your creditor's ledger, and then you identify all the amounts that are not appearing in the supplier statement or in the creditor's ledger account. Okay, and then from there, you will have to draw up now the first thing you have to draw up your creditor's ledger account, and then you will need to also look at the additional information given. So you also need to tackle the additional information given. So under question 3, we are given 3 questions. So the first one is theory, And with the theory part is well stated in your study guides. So I won't really go through or give answers to the theory parts. Everything is in the study guide or and also in the slides. Eh? In the study guide as well as in the slides, everything is there. So when it comes to the theory, just make sure you go to your study guide or you go to your slides, and then you look for the answers of the theory parts. So 3.1, 3.1, you are asked to differentiate the following statements one from another: the bank reconciliation and the creditors reconciliation statement. So what is the difference in here? So the bank reconciliation is a reconciliation between the bank statement and the cash book. Okay? While creditors reconciliation is a reconciliation statement is a reconciliation between the creditor statement, I sorry, the supplier statement and the credit ledger account. So that is the main difference in those two. Bank reconciliation is a reconciliation between the the bank statement and the cash book of a business, while the creditors reconciliation is a reconciliation between the supplier statement and the creditor's ledger account of the business. So that's basically the main difference between the two. And then you should also differentiate between the direct debits and the direct deposits. That I believe that is also in your study guides. Then you should also be able to identify to define the to differentiate between dishonor check and unpresented check. A dishonor check and unpresented check. And then we all know what a dishonored check is, and we all know what an unpresented check is. The last when we did the 2018 question paper, I gave you guys what unpresented checks are, and then as well as this dishonored check. When we did the bank reconciliation, I also told you guys what dishonored checks are. So you should be able to differentiate between those two just by giving the definitions of the two. And then we go to 3.2. So 3.1, check slides and study guide. So 3.2, you are asked to make an adjusting necessary in the creditor's ledger account. So we are going to draw up our creditor's ledger account, and then we do all the adjustments there. So we draw up an adjusted creditor's ledger account. So it's 8 columns. So you just the amount. So we'll have the date, the details, portfolio, amount, the date, amount. Okay. Okay. So the first thing that we record, just like in an updated cash book, ne? So the first thing that we record is our balance brought down. Ne? So you are given that our balance brought down is 168. So obviously this was the balance was even brought down already. Ne? So the balance was already brought down. There was no need for you to bring it down. So you record your balance. And sorry, this the first you write the heading, which is the updated creditors ledger account of the name of the business of Brandon P. Brampton Ltd. And then from there you write the name of the creditor. In this case, it's Chikongo Builders. So Chikongo Builders is the name of the creditor. Okay, so creditors are liabilities. Liabilities increases on the credit side. They increase on the credit side and decrease on the debit side. So all information that decreases our creditors will be recorded on the debit side, and all information that increases our creditors will be recorded on the credit side. Okay, so let's record the amount, the balance first. So 2012, and another thing again, please take note that the bank reconciliation and the supplier's reconciliation statements are done at the end of the month each and every time. Ne? They are prepared, they are opened and prepared at the end of the month each and every time, meaning that your balance or your dates from the balance and all other information that you record should be on the last day of the month. Ne? So in this case, it will be 2012 September the 30th. Ne? And then you record your balance brought down of 168. I believe that now you're seeing here that, okay, no, why is it my balance brought down? In this case, it's on the 1st of October, because that balance was brought down to the next day, but it's a wrong balance. Ne? So you need to reconcile that balance to get the correct balance of October the 1st. Now, to get that balance, you will need to draw up an updated creditors ledger account, and it's drawn up at the end of the month, always. So at the end of September, you had to draw up a updated creditors ledger account. So all information will be recorded on the last day of the month, starting from the balance brought down. Okay, so now we are comparing our supplier statement and our creditors ledger. So all amounts that are appearing on the supplier statement but they are not appearing in the creditors ledger should be recorded in the creditors ledger. So let's compare our suppliers debit side and our creditors and our creditors credit side. Okay, so we ignore the balances. So we start off with $98. So we have 98 on both sides. And then we have 75 in the supplier statement, but we do not have the 75 in the creditors ledger account. So we record it. Ne? So because when it comes to the suppliers, it is known as sales because we bought from them. But as for us, it's purchases because we purchased and we are dealing with our books. So in this case, we do not record sales anymore because sales has to do with them suppliers in their books. We are dealing with our books, and for us, it's purchases and not sales. So we record the purchases of the 75 that is not appearing in our creditors ledger account. So purchases of 75 Namibian dollars. And then you compare again. Okay, 112, you see 112, and then 54, 54. Okay, so those are the only amounts that are that are not appearing on the credit side of our creditors control creditors ledger account. So we record the date on both sides, September the 30th. Okay, so let's compare our credit side of our supplier statement and our debit side of our creditors ledger. Okay, so in this case, we have bank and discount 210. Ne? So we have bank and discount 210, and in our supplier statement, they only recorded the bank, but they never recorded the discount. Ne? So obviously that means that the discount will need to be recorded back to the um to the supplier's reconciliation statement. You'll need to add to add that discount. Okay, now we have $96 of purchases returns, but they recorded 69. Okay, so let's look at the additional information. Oh, sorry. So these are actually different these are actually different things, different dates. Mm, so you have sales returns of 69, but in the creditors ledger account is recorded as 96, and then in the supplier statement is recorded as 69. Okay, and it says that additional information, Brenton paid the balance owing at 31st August after deducting a settlement discount of 10 to which the company was entitled. You see, now meaning that if you check at the 210 bank and discount, we recorded the discount, but then the supplier did not record. It's not appearing in the supplier statement. And amounts that are not appearing in the supplier statement should be added to the supplier's reconciliation statement. And then you're told that Brantham Ltd returned goods to the value of 69 to Chikongo Builders. However, the bookkeeper entered the amount incorrectly in the ledger. So basically, we are the one that made the mistake. The goods we returned were of 69 value, but we recorded 96. Ne? So meaning that we need to add back the other amount. Ne? We recorded 96, which is a bigger amount, so we need to add back on the credit side the difference between the 69 and the 96. Or in other words, we need to cancel off that amount because we recorded a huge amount, a bigger amount, and therefore we'll need to cancel the part of the amount. And to cancel off an amount, you record it on the opposite side. So we'll say that it's 96 minus 69. We recorded 96 while it was supposed to be 69. So we record the difference is 27. Ne? So you go to your credit side, you're trying to cancel off that 27 so that your purchases returns become only 69. So to cancel off, you record the transaction to the opposite side. So the sales returns were recorded on the sales returns were recorded on the debit side, and therefore, in this case, they should be recorded the transaction, or to cancel off the transaction, it should be recorded on the credit side. So credit side, you will have purchases returns. Because purchases returns amount is the one that you're canceling out of 27, ne? Purchasers returns of 27 to cancel off that amount. Now, if you're to cancel off, obviously now you'll be left with only purchasers returns of $69, which is the correct amount. And then from there, we are also told that sales made by Chikongo builders on the 9th. Okay. So what sales made by Chikongo builders on the 9th were to Brains Ltd. Now where is the 9th? Oh, so if you look in your supplier statement, ne, the 9th, the $75. The $75, you are told that this amount was not meant for Chikongo builders, but it was meant for Brains Ltd. Ne? So this amount was not meant for Chikongo builders, but it was meant for Brains Ltd. And therefore, this amount we're not even supposed to record it because it does not belong to us. It does not belong to our business. It was supposed to be Brain, so we'll need to do that. We need to record the transaction in the reconciliation statement. Do we understand? Do you understand? Hello?
Oh, 75.
Huh?
Why did we remove the 75? Why
Okay,
did we remove the 75 for purchases?
okay. You are told, if you look at the additional information there, you are told that the
Mm,
sales made by Chikongo builders on the 9th of September. Ne?
mm,
On
mm-hmm,
the 9th of September, so you look in your supplier statement on the 9th of September, you are told that they
mm.
were to Brain Ltd. So this simply means that our suppliers recorded that we made a sale of 75, which we did not do, but they belong to Brains Ltd. Do you understand?
Okay.
So Brains Ltd
Mm,
are the ones that went to Brenton, went to what? Went to Chikongo. They are the one that went to Chikongo's to shoot what? They are the one that went to Chikongo and bought on credit, but it was not us. So what they did is what Chikongo suppliers recorded that okay, we bought on credit $75, but it was actually not us, but it was Brains Ltd. Do you understand now?
okay. Mm.
Okay.
But where do we record that?
This will
We
be
just leave
recorded
it
in
out.
it will be in the reconciliation statement because that's an error made by the creditors, and therefore that's an error that is made in the supplier statement, and therefore it will be adjusted in the reconciliation statement.
Okay.
So now we compare again, looking at the figures. Those are the only items that are not recorded, and since those are the only and so those are the only transactions that were supposed to be recorded in the Chikongo builders. So after that, we'll need to balance off our ledger account. We'll need to balance off our ledger account and then get our new balance brought down or balance carried down. So let's quickly balance. Obviously, on the credit side is the biggest, 168 plus 27, which will give us 195 on both sides, 195. And then we'll get a balance carried down of 195. And then from there, you bring it down. You bring it down to the opposite side, which will now be the 1st of October. October the 1st. Then you have a balance brought down of 195. Okay, so that was our creditors updated creditors ledger account. Therefore, now we are moving on to our reconciliation. We are moving on to our reconciliation statement. So we only have 2 minutes left. So I'm quickly going to end this session. I'm quickly going to end this session, restart it again, then we can continue with our what our creditors reconciliation, because I'm sure that you won't be able to finish the creditors reconciliation in just a minute. So I'll quickly just end the session and then you can rejoin for us to finish.